Good afternoon. I'm Danielle Fountain, the founder of the One Realty here in Austin, Texas. If you're watching this live, drop a hello in the comments. Let me know where you are from and whether you're already in Austin or actually just thinking about making a move to Austin, Texas. Today, we're going to do a full February 2026 market recap. I've got the final close data in front of me. And we're going to break it down how February compared to February last year, how it compared to last month, how it compared to December of 2026. So we're going to track the long-term historical averages. There is a lot to unpack. So I'm going to go ahead and share my screen so that we can kind of just jump in and we can start with the big picture. So right here, you should be able to, see my screen, and we're going to look at, we're going to be looking at, we're going to be looking at February 2026's data right here. Here you're going to see year over year difference. So this right here is February 25, and this is kind of the difference. This is also the month over month. So this compares us to January. And finally, we're also looking at our year to date. So we're also going to be looking at where we ended up in December and kind of where we are now in Austin, Texas. So without further ado, we are going to hop right into it. So first off, we are nearly up. I'd say we are nearly, we're up in regard, if we look at where we are in regards to sales pricing and how many homes that have sold, from last year to this year, we're up 1.8%. It's nothing, I say, massive or drastic. But if we look at where we were in comparison to last month, so last month we are almost 30% higher. So that's a huge difference. We're 30% higher if we look at where we were in January as far as the number of sales to where we are in February. That's a big jump showing, hey, we didn't have a lot of activity as far as last month in January, but we're seeing a surge this month, which makes sense with the interest rates going down and the activity that we are starting to see. Now, we've got some things that we are also going to look at. We're also going to talk about the price points. That being said, we have seen our price points have actually dropped down significantly. So if we look at where we are price-wise, when we look at pricing, the average sales for February 2026 came in at $761,000. Compared that to February of 2025, when we were at $803,000. So we're looking at like a 42,000 or 5.3% year over year. That's a meaningful discount in prices. So with that being said, I always like to look at the median price. And the reason I say that is it's going to be more reliable, the number, because it's not skewed by the ultra luxury sales that we have coming in. So 575 is our median. Last February is 601,000. So we're down about 26,000 or 4.46% year over year. Now, month over month, the median is actually flat. There was not a big change from January to February. The average was only down a little over 5,000 from January. So prices aren't free falling right now. It looks like they're kind of stabilizing month to month compared to year over year. But we are softer on prices year over year than last year. We are softer than we were 12 months ago. So what does that mean? If you bought in 2025 early on, it's likely that your home is a little lower in value than it is today. But if you're a buyer, that is actually great news. You have more purchasing power than buyers did a year ago. And that's just to keep in mind too, if you're a seller, make sure you're pricing it appropriately. So if we want to talk about the speed of the market, because that also correlates with the price. This is one of my favorite metrics to watch because it shows how long homes are sitting and what we're expecting. So in February 2026, the average days on the market was 75 days and the median was 50 days. So if we compare that to February 2025, The average was 76 days and the median was 54 days. So we're actually moving slightly faster year over year. The median dropped by about 7.4% and the average dropped by 1.3%. But if you look at days, it's very close. Month over month, that's kind of even more. We're seeing homes move faster month over month when we look at February compared to January, but that's normal for this time of the year. So you want to price your house right if you want your house to move, and especially as we head into spring. So that's a healthy sign for the market, which is normal this time of year. If we start seeing days stacking on top of each other, that means we're probably also going to see buyers removing themselves from the market. Typically in the spring, we will start to see homes move quicker. So pretty much the takeaway is if your house is priced correctly, it's gonna move a little bit faster right now. And that's, if it's not, and it's just sitting and we're not getting showings, you might want to reevaluate the price to kind of see where your house is compared to the houses that are moving in the market around you. With that being said, we kind of look at the section about buyers and sellers is the closing ratios, because that's going to pay a really good attention to who's giving and who's not giving. So the close price to list price ratios in February 2026, homes closed at an average of 97.02% of their list price and a median of 98%. That means like on a $600,000 home, you're on average paying $5,882,000 to $588,000. There's room to negotiate, but there's not massive room. The numbers are going to kind of tell us a little bit even more, a better story of, besides just looking at the close to list price, it's going to look at close to original list price, because this is going to account for all of the price reductions that happen before the home went under contract. Now, the average is 92.74% and the median is 94%. So if a seller originally listed at, like, let's say 650, they're closing close to 600,000 to like 610, 611,000. For sellers, this is why you have to price right from day one. Now, as we get into the spring, we're going to kind of see more buyers. We're going to see it move quicker. So if you were also selling in like October, November, December, that was really rough. And it was not even about pricing at that point. Honestly, in the fall, winter time of this past year, it was just that we didn't have buyers. Buyers were not there. So we really want to keep that in mind, as now that you're hitting the spring market, you should see a little bit more activity. If you're drastically dropping your price, or if you're a buyer and you see a seller drastically dropping their price, this may be a signal that there is some room with this seller. For sellers, that's why people pay attention. So if you're a seller and we start seeing price cuts and I'm a buyer's agent, that means there's a reason that you need to sell your house and that you're highly motivated, which means that we're going to come in with an even lower offer. This is just a telltale sign. You see a seller drastically dropping the price, that's why. You could see like 1 or 2 price drops after, let's say, 20, 30 days, you might see a price drop. That's going to be different than a seller that after a week is dropping their price. So pay attention to price drops, both if you're a buyer and if you're a seller. And if there's big price drops and you are a buyer, don't be afraid to make a strategic offer. Now, one of the things that I like to do is put everything into historical context. We can talk all day long about how we sold more houses in February 2025. It's not that 10 more houses. If you look at the historical low, it was 486 homes sold in 2011. Yes, that's the historical low, but if we look at the average, that's going to kind of play a little bigger of a picture, because this is really context about how Austin's market is performing in comparison to our historical numbers. So sold about 736 to 742 sales, going all the way back to 2025. So this month, February, we sold 566 homes. That's like 16, almost 17% below our historical sales. Having 170 sales below the normal, especially because the last like 3 to 4 years we've sold, that average has continued to go down, that median has continued to go down. it just shows you that we're still really operating at a deficit for the number of homes that have sold. And so year to date, it's tracking overall what we're seeing in January, what we're seeing in February, that there's a pretty big gap between the number of homes that we're selling and where we are. Now, this shows us that the market it's still normalizing after 2020 to 2022, when we just saw houses flying off the shelves. We are seeing that year over year, our price is down. We are seeing year over year a few more sales. We're not necessarily in a crash. We're not seeing prices aren't collapsing, because you kind of see that month over month. But we're still operating below our historical pace in Austin, Texas. So with inventory being higher, buyers have more options. Sellers, you just need to be strategic. The good news is that we are seeing home sell. Buyers are active, which partly is probably because interest rates went down. But as we head into spring, historically, that's going to be the strongest season. Last year, we had the worst March and April all the way back to 2005. So I'm I'm hopeful that we see a little bit stronger results coming in from our buyers and sellers over the next month. Hopefully these numbers will continue to improve as far as the number of sales. Buyers take advantage right now year over year. Like I said, our prices are down. So if you're a buyer right now, this is just generally one of the better windows to buy in Austin that we've seen. We've kind of, a couple years ago, we went down, and we've kind of normalizing it. Prices are down year over year. There's a little bit more inventory to choose from. You have some negotiating room, but the houses also might not be updated to the same condition. So that also kind of plays into our pricing. So yes, prices might be down, but that also might be because we're not seeing as many new construction or fully renovated homes. So just keep that all in mind when I do talk about prices, because sometimes we can't compare apples to apples because the houses and the quality of houses getting to the market are different. So with that, I am Danielle Marie from the One Realty here in Austin, Texas. Overall, like I said, we are seeing a little bit more activity when it comes to our selling and our buying. We're seeing a little bit more than last year, not much. Our biggest takeaway is that we are not seeing dramatic increases in prices. It's down. We're not seeing flooding the market. So our interest rates year over year, we're down between 0.75% to a full percent. Not quite a full percent, but we're down significantly. I just had a buyer get quoted 5.99% today with no points. So there is a lot of opportunity in regards to the buying market if you have the ability to buy right now. So with that, I'm Danielle Marie from the One Realty, and I hope you have a wonderful day.